Good afternoon, everyone. It's now 12:01, and I think we'll get our session started today. Good afternoon from Community Health Options. I'm Sharon Weir. I'm the Director of Business Development, and I want to welcome everyone and thank you for joining today's webinar. Just as a reminder, today's webinar is going to be recorded and it will be available for viewing later on. For those of you who don't know Community Health Options, we're a nonprofit, consumer-operated and oriented health plan that's been in operation since January of 2014. We are a health insurance company and we're licensed to offer health insurance, qualified health insurance plans, both on and off the marketplace to individuals and families. We also offer employee coverage through employers throughout the state of Maine. In today's webinar, I'd like to be introducing Jennifer Swarzinski, the Senior Vice President of Workforce and Business Development, and Cynthia Murphy is the Senior Program Director for Workforce Solutions. Jennifer and Cynthia are joining us from CEI, or otherwise known as Coastal Enterprises, and today they're going to be covering Economic Injury Disaster Loan, the Paycheck Protection Program, as well as unemployment. So I hope that by the end of the hour, you've all gained a very strong knowledge about the business resources available during COVID-19. With that said, today's session will be muted, so all participants will be able to use the chat feature should you have any questions regarding any one of the segments that they'll be reviewing today. So with that said, I'm happy to introduce Jennifer and Cynthia and let them take you through the webinar today.
Great. This is Jennifer. I'm going to be doing the first section of the webinar. And what we'll be doing is likely I'll go through some of the loan products and then we'll take some questions. So feel free to put them into the chat while I'm talking, and then we'll go through those questions. And then we'll switch over and Cynthia will cover unemployment. And if we have time, she'll also cover paid leave. And just reiterating, we'll be answering questions through the chat function. So, the first area I'm going to talk about, and I will just preface everything I say right now, a lot of this information changes on the hour. And so what I'm going to tell you is what I know right now to the best of our ability. And hopefully it remains pretty similar. After this webinar is done. The first loan product is the one that came out at the very beginning in mid-March. And this is a loan product offered by the SBA. It's the Economic Injury Disaster Loan. Everyone refers to it as the EIDL. It is a direct loan from SBA and their disaster division, which has always been around for the SBA, actually, for any type of disaster, and this was a declared disaster economic injury. It is a loan, and they have changed some of the who can apply and the maximum amount. And so you may have heard a much higher amount, but what's been recently changed is the maximum loan availability is $150,000. It's a 3.75% rate for for-profit businesses, and if you're a nonprofit, you get a discount to 2.75%. The SBA sets the terms. The SBA also sets the amount you're allowed to borrow, which is a very interesting and unique way to apply for funds. So the application asks a whole bunch of financial questions, and they make a determination based on your financial situation what they're going to lend to you. You do get to say yes or no when they offer you a loan, and you can also ask for a lower amount. This product, if approved, you don't have to start paying for 12 months. So that's an excellent feature. And from what we're hearing, the max term is 30 years. We anecdotally are hearing that most loans are being written for 30 years, but I can't guarantee that that's how they're doing every loan. The requirements are they are going to look at collateral. If you are going to get a loan over $25,000, they are pulling credit and they're looking at your ability to repay the loan. A key factor right now with this product is it is currently only available to agricultural businesses. Now, we think that that's just a short window of time that it's only available to agricultural businesses, and why I'm taking the time to explain it to all of you. I do anticipate it potentially opening it up again for businesses other than agriculture. It did get an increased amount of funding in the most recent stimulus package. And so the only thing I can say is that you have to go on the SBA site to see if they will change who is allowed to apply. The other very interesting feature to this product is what's called the EIDL Advance. And this is an amount up to $10,000 that is designed to get to you sooner than the loan approval, but isn't necessarily happening as fast as originally designed. So you apply, you check that you want the advance, and it's calculated up to $10,000 based on $1,000 per employee. This advance is eligible to people who don't receive and don't get approved for a loan. It is seemingly arriving in your bank account without any notification. Again, this is all anecdotal from other clients that are sharing this information with us. And this piece of the advance, you do not have to pay back. So it's an advance of a loan, but you don't have to pay it back. And I'll explain a little bit. It does have an interplay with the PPP. And so I'll explain a little bit about that. I think, Cynthia, I'm ready to go to the next slide. Thanks. The next program is the one that got and continues to get a lot of positive and negative press, I'll just say. It is a loan. However, a good amount of it, depending on how you follow the rules, is potentially forgivable. And we commonly call it a paycheck or a payroll loan, but I'll explain a little bit more. It's a little bit broader than just your payroll. So what it is it's meant to keep employees on your payroll, or bring them back onto your payroll if you furloughed them or laid them off. It is the way the amount is determined is a calculation of 2.5 times your monthly payroll, and I have an asterisk there because it's a much broader definition of benefits and benefits loosely defined, right? Health insurance, time off, all those other components that make up compensation. And it's quite a long list. So we do have a link in this webinar where you can go and read the more detailed list, and also with tips on how to calculate the monthly amount. And those links are at the very end of the slide. If you apply for this loan directly at your bank, and I say that almost every bank in Maine is offering this product, they have to be affiliated with the SBA as a 7A lender, but most people don't really understand those programming. So our suggestion is you reach out directly to your bank. You can look online too, and there is a way to search for it on the SBA site as well to find your, to see if your lender is participating. But Maine has over 100 participating lenders. We're quite lucky actually about that. The loan is drafted if you, for the portion that is not forgiven, it converts to a 1% loan, has a 2-year term, and these payments are also deferred, but for 6 months after disbursement. And the forgiveness portion of this loan, I will just say there's a lot of guidance that has been issued from the SBA and Treasury, but the actual forgiveness guidance is still not available. The SBA has said that they will be releasing that guidance by May 15th. So we're hopeful that that will come out and be actually relieve a lot of people's sort of concerns and fears of this product. And I'm happy to discuss those further if you want to ask questions in chat. If you get the loan, to get it forgiven, you need to spend 75% of your loan on payroll. And again, I'm using that term broadly, payroll. You are allowed to also use 25% of the funds on mortgage interest, rent, or utility payments related to your business. And the other component that is really important and can really impact if this is a useful product for you is that you also must spend the funds in the 8 weeks directly after your funds are dispersed to you from the bank. So you're going to apply. The banks generally are turning this product around very quickly. And so likely you would get a yes or no in 3 days. You know, some banks are turning this around in a day, I've heard. And then you have 10 days for those funds to disperse. They must disperse them in 10 days. So it's just important to think about what business line you're in, the timing on when you can, safely reopen in Maine, and can you bring your employees back onto payroll. You certainly may pay them for sitting at home. That's perfectly allowable. That's a business decision and not part of the forgiveness decision. Another thing that we have heard and are suggesting to business owners is that you open a separate bank account for this loan and that you make your paperwork and payment very clear where this loan is going to. We think that that will certainly help in showing how you've used it and qualifying for forgiveness. Another part of this loan is that you must, as the owner, certify that the current economic, this is the exact language, I believe, current economic uncertainty makes the loan necessary to support operations of your business. So the bank itself is not going to do its due diligence on whether or not that is the case for you. You must sign and certify, and there's about a whole page of different certifications you're making. On the SBA site, there is a sample application, so you can see all those certifications. Some banks have added additional questions and other information that they're gathering for the loans. So the SBA site gives a nice overview, but you will likely also have to provide some other items to the bank. Definitely payroll records. They're calculating this based on last year's payroll at the given time, so you'll need to supply some paperwork there to justify the loan ask. I think, one thing I didn't say, I've been thinking about employers, and I've been using the term payroll. This product is also available for self-employed individuals. And so that's a really excellent source. They are, you usually don't have, for many self-employed individuals, you're not paying into payroll. And so they're going to ask you for tax documents, tax returns. We have heard that some people have asked for 1099s. Now, again, not the 1099s you're paying to someone. You can't use that as payroll. But if you're a self-employed individual that receives 1099s, that's another way of documenting officially income and revenue that you have. Yeah, I think, Cynthia, I'm ready for the next slide. Okay, so the final loan product that exists, and again, this is another SBA Small Business Administration product. It's not, you apply to these through different lenders. Many banks are what are called 7A lenders. They also process what's called a 504 loan. And then Maine has 5 micro lenders. These are nonprofits that are borrowing money from the SBA and then lending that money back out into the community in loans of $50,000 and under. And part of the CARES Act also allowed for those of you who have one of these loans, and again, these are loans titled through the code of how the regulations are written, so they don't mean anything if you don't know what they are. If you have a loan with a bank and you heard and understood it had an SBA guarantee, you likely have one of the 7A or the 504 loan. And I would encourage you, if you haven't heard already, to contact your bank. The SBA is paying 6 months of principal and interest on these loans. If you get a new loan from one of these 3 products, the SBA will also pay 6 months of principal and interest on these loans. They are loans, and they are going to get underwritten in a standard way that they would be underwritten. So you'd have to prove your ability to repay. But what it does do is there's a potential for giving some amount of working capital to then get back up and running and have a brief moment where the loan is paid in the first 6 months. I will say, and this does seem to be a trend, these funds, it was funded with a finite amount of funding, and so it's supposed to last temporarily until September 27th, new loans written by then. But if the funding that was allocated from the CARES Act is exhausted, then these products will also go away. And I will just say, CEI is one of Maine's 5 micro lenders, and so we are in fact offering this product. Again, it has to be for small business. I guess should just say all of these have smaller requirements, or it's not as broad as who can apply for the PPP and EIDL. We have to follow the law and how it's allocated. So it's mostly for-profit businesses are eligible for the 3 loans that are in the debt relief. And that is the lending portion. Cynthia, are there any questions?
Yes, we do have some questions. And just before I pose the first question to you, a reminder to everyone, if you do have questions, please post them in the group chat function, or you're welcome to send them directly to me, Cynthia Murphy, and I will consolidate them and read them out to Jen for response. So the first one is related to the loans. Is there discussion around the various stages of reopening that Governor Mills has issued and the ability to use these loans?
I'll see if I understand understand that question, and whoever asked it, if I'm not answering it, certainly please clarify. You certainly can use these loans to help your business reopen. And do you think I'm missing any? I'm not quite sure what that question is. Do you have any insight, Cynthia?
I think it's probably around, now that Governor Mills has come out with the phases for reopening, and particularly around the rural counties that can open now, is there any conversation out there about how these loans might be used in particular as it relates to reopening? Or is it kind of a general, general use?
Yeah, they I would say the EIDL loan is really meant, the EIDL loan is based on disaster loans in general, and disaster loans are really designed for, oh, there was a flood, now it's over, or there was a hurricane and now it's over. And so I think the area that they tried to accommodate there is with deferment of payment and a very long term. Certainly, we get it. A lot of businesses really can't take on debt, and even debt that's a 30-year note can be really tricky. I will say that sometimes when you run the numbers, it's pretty amazing what you could borrow and the payment that you would be paying over 30 years, right? It's like a mortgage, to get some capital to get up and running. So the EIDL loan has some use. I just think it really depends on your business. The PPP was designed, and this is Jen's opinion, not the SBA's opinion. I believe it was designed to keep people engaged with their employee and able to continue working if there was no revenue coming in. There are definitely challenges with that program that we are desperately trying to change federally. I don't think we're going to get what we want out of that. And so I'm sharing with you the design of it right now. I think that one also is useful for certain businesses that have been able to stay afloat on some level and get some coverage for their employees. I will say it's really tricky for many hospitality or tourism businesses who just can't be open, and but that's more commentary than not. I can't speak to whether or not the state is looking at these federal programs and designing their reopen plan based on them.
Yeah, it is interesting because you were commenting that the Paycheck Protection Program turnaround time is relatively short. And so, given the rural reopening plan, there is kind of an interesting thought about how someone might use them to ramp back up and think about how they might need to accommodate social distancing or new health and safety standards that they'd like to achieve.
Right. And just to be clear, the PPP cannot cover those costs, which is also crazy. But if you're using those, if you're paying payroll, you can use other funds for maybe some additional costs you might have.
Yeah, I think that's a good idea. I think that's right.
Any other questions?
I think that's it for now. But as folks think of questions about the loans, please key them in, and we'll be sure to take them at the end. So for now, we will talk a bit about unemployment benefits. And as you can see on the slide that's in front of you, unemployment benefits are available related to COVID-19 for full and part-time workers, including contractors, so people who are freelancers or gig workers or receive a 1099, and also including people who are self-employed. So if you own your own business and your business has been temporarily or permanently closed, or you receive a W-2 or a 1099 and your business has been temporarily or permanently closed, you are eligible for unemployment. You're also eligible for unemployment related to COVID-19 If your business has been reduced, so you're earning partial income as a self-employed worker, or if you were a full-time W-2 worker and you're now working part-time or reduced hours related to COVID-19. Similarly, if someone is taking unpaid leave, either due to their children being home from school or childcare, or taking unpaid leave because they've been diagnosed with COVID-19, they're eligible for unemployment benefits. There's been a lot of coverage in the media here in Maine about unemployment benefits. And so what I'll do is I'll talk a little bit through what the benefits are for both W-2 workers and for people who are self-employed or receiving a 1099. If you're a W-2 worker, there are a couple of things to keep in mind. The state has waived the requirement to search for work if you're unemployed related to COVID-19. Secondly, the state has waived the minimum threshold for earnings to be eligible for unemployment. So in normal times, someone has to have earned roughly $5,200 over a year period to be eligible for unemployment. That has been waived. So if someone is a W-2 worker, the calculation for what they would receive from unemployment benefits is based on their earnings. The combination of what's available through the state and as a result of some of the federal legislation is that unemployment related to COVID-19 is available through December 26th or up to 39 weeks. The maximum that someone can get is $445 a week, and that's based on your earnings. For the period of March 29th through July 25th, every single person who is receiving unemployment benefits will also receive an incremental $600 a week. So the first bullet under the W-2 workers box relates to what you receive from the state. The $600 a week is coming from the federal government. You only apply through the state. Everything has been consolidated, so you just have to go to one place to apply. The money's just coming from two places. One of the terrific aspects of the temporary law changes related to unemployment is for self-employed workers and for people receiving 1099s. Starting March 15th, for every week that someone is unemployed or working reduced hours, earning partial income related to COVID-19, they will receive $172 a week. So it's a fixed amount, same time period as applies for the W-2 workers, so it's up to 39 weeks, ending December 26th. And that same incremental $600 a week applies for those who are self-employed or receiving a 1099 for the same time period. This just opened on May 1st, and what the State of Maine Department of Labor decided to do is to give every self-employed worker or 1099 recipient a fixed $172 a week. Then at the end of May, the Department of Labor will go back out to everyone who's applied and ask for tax documents. They'll take a look at your earnings, and there's a possibility that you could receive more than the $172 a week. Secondly, the benefits for the self-employed and the 1099 recipients could be extended back as early as February 2nd, and that will be determined when the Department of Labor asks for your tax documents and receives them and reviews them at the end of the month. A couple of other things to note: if you or any of your employees are applying for unemployment benefits, once they put that initial application in, That's just the first step. You need to apply every week. Every week, someone needs to go in and certify whether they earned any income or not. And that's what triggers continued unemployment benefits. Unemployment benefits are delivered directly into your bank account. You fill out direct deposit information, or if you prefer not to do that, you can receive a debit card in the mail. A couple of other things. If you haven't applied and you think you're eligible based on what we've talked about today, there is a URL on the screen here. The slides will be made available to you, and this is where you need to apply. You should apply online. The phone lines are jammed with people calling about their applications, and the most efficient way for you to apply is to do that online. It's up and running 24/7, so plenty of time to get in there and file your application. For those of you who own a business, you may know that typically, if you have a worker who applies for unemployment benefits, your experience rating is negatively affected, and that is also waived related to COVID-19. So there's no negative impact related to anyone, you or any of your workers, filing for unemployment benefits. So with that, if there are any questions about unemployment benefits, I'm happy to take those now.
I'm not seeing any right now in the chat, Cynthia.
Okay. Well, if you think of any over the next few minutes, please feel free to enter those either directly to Jennifer Sporzinski or me, Cynthia Murphy, or to the entire group chat function, and we'll take those. We get a lot of questions about unemployment benefits and the form itself and how to answer questions. So if you are experiencing any frustration or you want to know how to get your password unlocked, feel free to ask. That's what we're here for today. Well, the last set of content that we'll share with you today really relates to those of you who are business owners. So you may be curious about a piece of federal legislation that was passed in the middle of March, and it's called Families First. And there were a number of provisions in that, two of which we're covering today. One provides emergency paid sick leave related to COVID-19, and the other provides emergency paid family leave. So you can see on the chart, if you are a private sector employer with fewer than 500 employees, everything on this slide applies to you. It is possible, if you have fewer than 25 employees in some situations and fewer than 50 in others, to apply for some exemptions. But for the most part, anyone in the private sector with fewer than 500 employees is required to adhere to what you see on the slide. So let's talk through some of the details. If you have a full or part-time employee who is unable to work because they have been asked to quarantine, or they've been asked to self-quarantine, or they are experiencing symptoms that are COVID-like and they are seeking medical help, employers are required to pay up to 80 hours of paid sick time at the regular rate that the employee earns. And there are calculations available for employees who work variant hours, or variable hours, I should say. The limits on that are $500 a day or $51.10 in total over the 8-hour period. If you have a full or part-time worker who's caring for someone else who's in quarantine or experiencing symptoms, they're eligible to take up to 80 hours of paid sick time at 2/3 of their regular rate of pay. And the final category covers something that's also covered by Maine unemployment law. So you saw it on the prior screen as well. So someone has a couple of options here. if you have full or part-time workers who are caring for a child because their school is closed or their childcare is closed related to COVID-19, they are eligible for 12 weeks of emergency family leave. The first 2 weeks are unpaid. The next 10 weeks are paid, and they're paid at 2/3 of the regular rate of pay, and you can see some thresholds on the screen here. Something to know is that if you are an employer and you are required to cover your workers, either related to the federal emergency paid sick leave or the federal emergency paid family leave, you are reimbursed for what you are paying out. And you are reimbursed, quote unquote, immediately through your payroll tax credits. So when you're filing your regular payroll taxes, there's a form that you use to indicate what you've paid out in these two categories, and you simply take that off of your payroll taxes. So with that, Jen and I are available to take questions on any of these topics, either the loans that are available to small businesses to cover this time period, or unemployment during the pandemic, or the emergency paid sick or emergency paid family leave.
Cynthia, we have a question about the exemptions for employers with less than 25 employees in these examples.
So employees could apply for an exemption indicating that it would be difficult for them to comply from a business standpoint, that it would be detrimental to the business to comply with what you see here on the screen for emergency paid sick or emergency paid family leave. I can say that the guidance that the U.S. Department of Labor has put out encourages employers to work with their workers to understand what they're trying to achieve and to try to work it out. The other exemption that can be applied for is that, say in this final bullet where you're caring for, you've got an employee who has children home from school, and schools are closed, and it's difficult for them to work, and so you are providing the 10 weeks of unpaid emergency family leave, but it becomes difficult for you to continue to hold the job open for them. There are some exemptions that you can apply for there. There's certainly an understanding that in many businesses, it would be a challenge to continue if you needed to hold a position open.
Great. There's another question here. I love it when people get really specific because it's helpful. And this one is, if an employee is only working 15 hours a week now, seems like they've lowered their amount of time, but is typically full-time, does that extend the 12 weeks? And then it says they're collecting 2/3 of wages not worked and caring for a child.
Yeah, so there is a calculation on the U.S. Department of Labor website on how to handle people in this exact situation. And we have some links that are on the final slide. So I'm going to suggest that you go look at the calculation. I don't remember it off the top of my head. I would say in that situation, you have a couple of choices here, depending upon how long you think that your business will be at reduced productivity capacity, reduced need for workers. You've got this emergency paid family leave, and then should that run out, you may decide that person would be well suited for unemployment benefits for working reduced hours.
Okay, we have some more. We got a thank you on that, actually. So this question is about nonprofits who self-fund for unemployment. Is there any relief comparable to employees whose rate is not being charged?
Yeah, great question. So this is a question for there. So just to back up and provide some context for people, all for-profit businesses with employees are required to pay into an unemployment insurance fund. And there's a rate at which businesses pay into that. Nonprofits, and a lot of municipalities do this, but nonprofits can opt out of contributing to the unemployment insurance fund for the state. And they can earn a status which is called a direct reimbursement employer. And so if they have a worker who applies for unemployment, instead of the state funding it, the state bills the nonprofit at a full rate. And just recently, the state of Maine has said that they will cover 50% of what a nonprofit who has declared this status of being a direct reimbursement employer. The state will cover 50% of what the nonprofit would typically have to cover, which is pretty terrific, I think.
Excellent. Let me just see if I need to scroll any further down. Believe that is all of the questions for now. Oh, sorry, another one came in. That's why it's always good to just wait a little. Yeah, the person who asked that last question, Cynthia, wants a reference to where they can find that information.
It is on the State Department of Labor Bureau of Unemployment Compensation website. The website has a lot of information on it. And I don't remember off the top of my head, but I am really happy to look for it. So if you would like to connect with someone at Community Health Options, they can get you my email address. It's cynthia.murphy@ceimaine.org, but that might be a lot to write down. So I'm happy to locate that on the direct reimbursement for nonprofits.
And we're happy to connect you, Cynthia. So if we get
Thanks, Sharon.
Yep.
Oh, there you go. Oh, Jen's on the game. Thank you.
Sure. They said thank you. I believe, let's just give a teeny bit more time if there are any other questions. I do, one thing I forgot to mention, which is actually pretty big. If you receive an EIDL advance and you apply for a PPP loan, those work they work together. And so if you got $5,000 as an example in the EIDL advance, then $5,000 of your PPP is not forgivable. And it's just a way that they're not using these terms grants, but in some respects they are playing out like a grant. And so they wanted to reduce the amount of grant dollars.
The only other point maybe we should mention, we get a lot of questions about if someone is self-employed and they've received the PPP, how does that relate to unemployment? And so I'll give you the quick answer. You can't take both at the same time, but if you have your paycheck protection program and you're paying yourself for that 8-week period, you can receive unemployment benefits before and after that.
Yeah, thanks, Cynthia. There are no more questions.
Great. Well, thank you so much. And thank you to Community Health Options for hosting us today. We're thrilled to answer any questions as they arise for folks who are participating today. So thanks so much. Bye-bye.
Thank you. And for those of you who do have additional questions for Cynthia or Jennifer, please feel free to use my email to to connect with them, and we'll make sure that that happens. And essentially want to thank everybody for joining today. Bye-bye.